Hi, Callum Newman from the Daily Reckoning Australia here for your Facebook video update today for Monday. There was a story in the Wall Street Journal recently, and I'll just flick it up there. You should be able to see that. And basically it's saying that even though US stocks have taken a bit of a tumble over February and March, that the price still isn't right. And what they're referring to is a metric created by an economist called Robert Shiller, and it's a valuation metric on the US market, which its full name is the cyclically adjusted price to earnings ratio, otherwise known as the CAPE ratio. Usually when you get a very negative economist or someone who has a negative view on the US stock market, they often use this metric to say that US stocks are highly overvalued, and at the moment it's about 31. It's registering the CAPE ratio 31, and the previous two highest peaks in it, if you backtrack, are 1929 and before 2007. So it's very easy to make a case today that US stocks are dangerously high and they're about to go down as they did in those two previous episodes. But if you spend a lot of time around the markets over the years, you see this one, or you would have seen this one trotted out a lot. And just to prove the point, back in 2016, a guy from one of the Montgomery funds, an investment analyst there, rebutted it in an article called No Case for CAPE. And part of that rebuttal was to say that using the CAPE ratio had a very poor predictive power for gains in the US stock market since. So you can see that back in 2016, people were using the same metric to warn against US stocks, and they're since up, I'm not 100% sure, but probably around 40%. So point being is to be skeptical of any one metric when it comes to the market, and certainly of the CAPE ratio, as it says, you can still use it as a tool, but its predictive power historically has not been good as a guide for earnings going forward. And a better one, in my view, is a simple forecast of 12-month earnings going out, which is currently at about 16, which is around the average for 25 years. So in my view, US stocks are not dangerously high and can continue to go higher. That's not to say that it's guaranteed, but I don't see a major collapse coming anytime soon. Thanks for watching.